It is my honor to introduce the next speaker, Anthony Graziano. I've heard him speak a few times earlier this year, and some of you, I know a lot of you do business in both counties. If you pay attention to the media, we've been attacked on many fronts in Miami-Dade County in particular, and there's a lot of misinformation being given by the news media. And basically that's going to happen. It's their job to sell and you know, make headlines and make money. But it is our job to address the misinformation and get the factual positive information out there, and that's a big part of my job. So Anthony is going to present you with the real state of the real estate market. He was misquoted in an article recently as well, and he's going to give you information on both counties, but a lot of good information on Broward County. And his presentation, which we heard a couple weeks ago, was excellent. So if you're not in the room, you want to get in here now, because this is something you don't want to miss. And now I leave you with Anthony Graziano of Integra Realty Resources.
Good afternoon, Broward County. Very excited to talk to you about the real estate market today, about what we're seeing in the real estate market. By way of background, the name of my firm, Integra Realty Resources. We founded the firm in 1999. We had about 23 initial offices that did primarily commercial real estate consulting, appraisals, and market studies. And the creator of my firm here in Miami, a gentleman by the name of Michael Mad Dog Cannon, had been in the market for over 40 years before he joined Integra. He was one of the founding members, and I've since taken over for him. He unfortunately passed in 2012, but I'm very happy to report that IRR Miami Palm Beach is very much alive, robust firm. Again, we do a lot of commercial real estate work, but we track the residential housing market primarily because rooftops drive commercial. And we look at the housing markets, and as we've been doing that and doing market studies and consulting, we get a lot of reaction from the community saying, well, can you produce for us a generalized market study? And so we've been doing that for many, many years. We have a lot of historical information about different cycles in South Florida, different drivers in South Florida, what's different this time, which is a question that I get asked a lot. And so I'm here today to talk to you about really where we see the market, what we're seeing in the market, kind of some contemporary things that have been happening. And primarily, as Linda mentioned, you know, I was interviewed for a Wall Street Journal article about probably a month and a half ago at this point. And I spent about 45 minutes talking to the reporter about Miami in particular. And we're going to talk about why Miami is important, and downtown Miami in particular. But I spoke to the reporter for about 45 minutes and explained why I did not think that we were on the verge of oversupply, what the real metrics were that we were looking at to make that conclusion. I provided data, I provided charts, I provided all those things. And then at the end of the week, the article in the Wall Street Journal hits the headline, "Miami Condo Bust Looms." And I said, okay, well, that was pretty much a waste of an hour and a half, but I was actually, you know, I understand how reporting works, right? I mean, the headline is written by the editor. The reporter writes the article, the editor writes the headline, and headlines sell papers, and that's nice. And it really was a magic headline, right? Because they didn't say that the condo bust is happening. They said it's looming. So that if it doesn't happen, then they say, well, we didn't say it was happening, we said it was looming. And if it does happen, then they say, well, you see, we predicted the housing bust. And so I want to talk to you today about, you know, our perspective on that, and also really tie it back to what we see happening in Broward County, because we're also seeing some very robust growth here in Broward County. I think this year in particular, you're going to see some very good things happening in Broward while we hear mixed news about what's happening in Miami. But I'm going to present both perspectives, both Miami and Broward, because these economies are linked, and the buyer pool is much more tightly linked, and I think you will see at the end of the presentation why I'm making some of these statements. That being said, I guess we're going to spend about 45 minutes talking about this. I want to preface my comments with this. I was on Fox News back in 2007. They invited me to come in just as the residential mortgage-backed security market was imploding. A long-term capital had announced bankruptcy, and sort of we were at the end of 2007 when all of the collateralized debt obligations were everybody started to realize how much bad debt there was in the residential market. And they had me on Fox News, and they said, so do you think that when's the next shoe going to drop? What's going to happen in the commercial real estate market? And I said, oh, don't worry about it. I said, the commercial real estate market, very sophisticated. Companies like Morgan Stanley, Goldman Sachs, I mean, these companies are so smart. And of course, about 6 months later, they were closing the doors and guys were coming out with their boxes of stuff as they lost their job. So if you don't like what I have to say today, don't worry. I can tell you, I make predictions. I made a lot of predictions for a living, and many of them do come true, and I don't get any credit. And many of them don't come true, and I don't get any credit for that either. But for what it's worth, this is our perspective on where we are in the market. The data that I'm going to show you today was developed in conjunction with One Sotheby's. I always promise our agreement requires that I credit them. Great firm, and it's not a commercial for them. It is to say, however, that in addition to the work that my staff does, the One Sotheby's team does a lot behind the scenes to inform me as to what's happening with new product in the market, new projects in the market, and I get a lot of feedback from the brokers, but I also get a lot of feedback from other brokerage groups and other brokerage firms throughout the region, and I really appreciate it. For me, coming to talk to you all like this is really kind of a feedback loop. My staff and myself, we're in contact with you every day, and I hear a lot of things about what's happening in the market, and I gather a lot of good information. So I would encourage you, if you're interested, you can always find me somewhere on the web, whether it's in LinkedIn or by my webpage. Feel free to drop me a line, shoot me an email, even give me a call to talk about what's happening in the market or if there's anything that you think you're seeing. A couple of things about our methodology. We do use a lot of the MLS data, but we also built a condo index where we're actually using the public record data in conjunction with the MLS because the condominium market does not always move through the MLS at the same order of magnitude as the rest of the residential market. And the other thing that happens is when you start to aggregate the MLS data for the condo market, you get a lot of noise, right? You have a lot of condominium projects that are very old that tend to weigh down the average, and then you have new product that's introduced to the market, which tends to elevate the average. And when you're in a market that's under construction and there's a lot of new construction coming to market, then the average prices tend to go up because those transactions tend to dominate the market. And so you look at average pricing and you reach the conclusion, well, pricing is going up, average pricing is going up, which is true on the average. The problem, of course, is that what you're really doing is mixing new product in, elevating the average, but it's not really telling you the directionality of the market. And so what we did was we took a lead from the public securities market, and we built what we call our condo index, where we went into every submarket. We identified what we thought were the 4 to 9 key buildings in that submarket that were representative of the luxury market in that submarket. And then we've been tracking those prices and resale prices against themselves within those projects and aggregating that data. So if you see some of these numbers today and you say, well, I'm going to check that out in the MLS and they don't exactly match, like one of the reasons is methodology. And the other reason is that we scrub a lot of this data. We try and get through the data and take out the internal transfers or the transfers that look related so that we are getting really to just the pure market data. So what I want to talk to you about today really is starting with the luxury market. How deep is it and what will 2016 hold? Kind of what are the big drivers in the luxury market that are changing the way luxury is sold? I want to talk to you a little bit about the condo market in Miami and market psychology and why I think downtown Miami is important. And even if you're practicing in Broward or Palm Beach County, why it's important to you. Because I can tell you that when you pick up the national news media and when you look at how important this region is from a global perspective, the people that are outside of this region that don't live in this region every day, they're reading these headlines. And when they hear things are bad in Miami, or going bad in Miami, or could go bad in Miami, it sort of smears the whole region, right? And the other difficulty, of course, is that people that are out of the area think of Miami, they think of South Florida. Miami has sort of co-opted the South Florida brand. And I think that just very much the same way that when you read negative economic news, and you start thinking about, well, what does this mean in terms of the economy? And you start to hear about all the other countries in the world that are having global economic difficulties. You say, well, how long can it be, of course, until the United States has that problem? I'm reading in the Wall Street Journal that this country's in default and that country's in default. The banking system and Deutsche Bank is having problems. And my goodness, what happens to Europe? Well, if Europe is in trouble, what's going to happen to Russia? And so you make these associations, and then all of a sudden you say, well, if the rest of the world is sick, what in the world is going to happen to the U.S.? Well, that same type of psychology exists as it relates to Miami. Broward is its own brand. Broward, Palm Beach County, South Florida is very much its own brand. And you've got some very positive things in the sense that the brand is differentiated. It's not as Latin. It's not as driven by international global economic conditions, although that's changing. But nonetheless, South Florida as a region, I think Broward and Palm Beach County certainly very much differentiate themselves from Miami. But the world doesn't view it that way. What the world hears is Miami's having a problem, so that means everywhere in South Florida is going to have a problem. And so we'll talk about that a little further. And then I want to give you some thoughts on, I think, where we are today and where we're going. And so that's kind of the big picture outline of what I'm going to talk about today. We took a look at the luxury market, and we defined the luxury market on the single family side, very much the same way that we talked about the condo index. We developed a couple of different methodologies to get to the numbers that we felt we could track on a consistent basis. And so what we did in the big snapshot was to look at the whole county and just segregate it by price. Now obviously, this doesn't work at the sub-market level, because if you start segregating by price in sub-markets that don't have this price point, the luxury market, of course, in Southwest Ranches is different than it's going to be, on the east coast of Florida or on the intercoastal. So we started though by looking at the broader market and saying, what do the number of transactions look like, in the 1 to 5, 5 to 10, and $10 million range. And what you see is that Broward County actually held up really well. The number of units sold in the $1 to $5 million category went up, but the number of listings also went up. And we're starting to see that change a little bit in Miami-Dade County, and we'll talk about that. The $5 to $10 million transactions, again, went up quite a bit. You had 15 versus 10 sold, and the listing inventory went up a bit. You really don't have much of an over $10 million market at this point. It's a handful of transactions. But at the same time, the metrics in that luxury category for the whole county are still relatively strong. We are starting to see some buildup of inventory, and I expect that as we get through 2016, when we look at these numbers again at the end of 2016, I think you're going to see that 2016 in Broward County probably performs at or slightly below the level of 2015, but the number of listings will have increased over the course of the year. Contrast that with the Miami-Dade luxury market. You can see that the numbers sold went down quite a bit, 1,027 transactions down to 866. So we actually lost the share of the market in Miami-Dade County in the $1 to $5 million range, and we substantially added to our inventory from 1,141 average listings per month to 1,490. Now, these listings per month are not absolute numbers. This is an average listing per month. So what that means is that as marketing times increase, that average listing per month number goes up as well, because we're counting that as to how many listings we're on in every given month. So a house that stays on the market 6 months gets counted 6 times, and if it stays on 9 months, it gets counted 9 times. So I will tell you, it's not just a matter of the fact that there's more inventory on the market, but the inventory is hanging on the market longer in that $1 to $5 million range. We see the same thing in the $5 to $10 million range. We had about the same number of transactions, Miami-Dade County, but the inventory went up quite a bit. And I would say that that's also owing to days on market and people stretching to get the price for their home that they thought they were going to get, and when they didn't, they just stayed on the market longer. And then, of course, in the $10 million transaction category, about the same transactions over the year prior, but again, substantially more inventory. So as a general rule in Miami-Dade County, what we're seeing is a lot more inventory in that luxury price segment, and the transactions in 2015 are down, and we expect that the transactions in the whole will be down. A lot of that is order of magnitude. A lot of that is order of magnitude. Again, you're talking in the $1 to $5 million range in Miami-Dade, 850 to 1,000 transactions versus Broward County, which is 460 to 570 transactions. So about half the sales. I've made this comment before, and I haven't had anybody disagree, and so now that we have so many people here today, hopefully I'll make this comment again, and somebody will stand up and say, you're totally wrong. But my ground experience is as follows. Broward County really came out of the recession about 18 to 24 months after Miami-Dade County. A consequence of a number of different things, but one was Miami-Dade County attracted a lot of international capital for investments, to buy out the bank notes, to take over a lot of the failed debt that was on the books in 2009, 10, and 11. And as a result, Miami-Dade County had worked through a lot of the messiness of the last recession by about 2011. The foreign capital that came in and bought all the condominiums downtown basically absorbed all that inventory and rented it. And so by 2011, we started construction again. And what I can tell you is that South Florida region, although it's very strongly correlated to tourism and is very strongly correlated to other drivers in the economy, there's no question that about 10 to 15% of the economic GDP of our region is based on construction. And so when we started building again in Miami, Miami came out of the recession quicker than Broward did. And I remember in 2012 and early 2013, I was going to meetings in Miami and everybody was telling me, you know, things are really looking good, things are really looking up, we're so excited. And the next day I would drive to Fort Lauderdale and have a meeting with the same types of individuals, and they'd say to me, boy, we're not going to be out of this for another 6, 8, and 10 months. So there's no official statistic that I could point to. I don't believe in the government statistics. They come out too late, and when they do, they revise them to fit the story. But my ground experience is that, you know, Broward lagged coming out. And as a result, your housing market started a bit later. It started to recover later. And your employment growth started to recover later than Miami. And so I think if you sort of move those two time periods forward, what I'm saying to you is, yes, things are slowing down a bit in Miami, but I think Broward still has some legs, and it probably has another 12 or 15 months worth of legs, assuming, you know, no major economic national catastrophe. Certainly you see this in the 2015 luxury growth. I mean, Broward's luxury growth outperformed Miami-Dade's in terms of the number of units sold as a percentage of what the normal run rate is. Even though Broward still doesn't have any measurable $10 million market, the inventory is very stable. We are starting to see the 1 to 5 million segment slowing with more inventory, and inventory is up in all segments in Miami-Dade County. I will say this, just because Broward came out 12 to 24 months after Miami-Dade County doesn't mean that you have a 24-month window in which to continue to outperform. The region is very tightly linked, and so you're going to come out later and you're going to go back in sooner. And I would say that, you know, as things are slowing in this luxury segment, there are some reasons why that's happening, and Broward County is not immune. So as you're talking to buyers today, and to sellers in particular today, setting expectations in 2016 is going to be very important. Looking at the broader single-family market, you know, one of the things that's very obvious to me as an analyst is the price points and the relative value that you receive by locating in Broward County versus Miami-Dade County. When you look at the statistics for waterfront single-family homes, you know, average pricing is up 39% from 2011, which is very good. But ultimately, you're still in a $200 plus $225 a square foot plus price point. Now, that's on average. Obviously, I recognize that there are many waterfront homes that sell for quite a bit more than that. But when you look at the Miami-Dade waterfront single family, you'll see that our pricing in Miami-Dade is, you know, $500, $600 a square foot. I will also say that the way in which waterfront is captured in Broward County is somewhat misleading, right? Because you have waterfront properties that are true, you know, ocean views and big water views, and then you also have intercoastals that are waterfront classification, but they're not really truly the same in terms of price category as the general waterfront. But the good news is on the single family home side, you know, the listings are up, but sales are also up. So that sort of matched the broader luxury market. On the non-waterfront side, you know, pricing is still pretty much below replacement cost at $155 a square foot. Inventory is up a little, but the number sold is up quite a bit. So very good performance throughout 2015 on the non-waterfront single-family side. Contrasting that, as I said, with Miami-Dade, this is the waterfront single-family home Miami-Dade. You know, number for sale is up, inventory is up, and the number sold is down slightly. I would call it even, but pricing is still up, which is very interesting. So 2015 in Miami-Dade County, we went through this period where people were not adjusting their pricing, and they were on the market longer, but we got about the same number of transactions. I mean, we got a slightly less number of transactions, but the pricing stayed the same. I think we're going to start to see pricing in the single-family waterfront category with so much inventory available have to move down over the course of 2016. On the non-waterfront single-family, again, you know, the pricing is probably at or around replacement cost. The distinction in Miami-Dade County is it's very difficult. Location is very difficult to replicate, and there's not a lot of land left. So again, we're starting to see price per square foot elevated. The number for sale is down slightly on the non-waterfront. I don't know if you're experiencing this up here, but in Miami-Dade County, the mantra is if it's under 700,000, take the listing because it will sell. The non-waterfront single-family home product is still selling very well. There's been very, very low creation of new single-family homes by the builders in Miami-Dade County. And so as a result, the pent-up demand that has been there over the last 4 or 5 years is now, it's hitting the market, and it's really been hitting the market, 14 and 15, and I think it's going to continue into 16. And so unless you're in a community that has really new single-family alternatives available, I think the product in 2016, this non-waterfront single-family product, in the $400,000 to $600,000 range is still going to hold up rather well. When we look at Broward County waterfront condos, again, we're looking at the number of sold is up, the price is up about 6% overall. There's been a good recovery in that market, but the number for sale is up as well, about 8%. I think part of the Broward County condo market is really driven by the second home buyer and the people that are coming in from the Northeast that want to buy a second home. And you'll see when you look at the Miami-Dade numbers on average price, Broward County represents an excellent value in the condominium space. And that translates to two things. Number one is it translates to a good entry price, but it also translates into reasonable carrying costs. And so when you're out talking to buyers and second home buyers that are thinking about buying a condo in Broward, or they're thinking about buying a condo in South Florida, the conversation really has to focus on what the value proposition is here. And we started to see about a year ago that the international buyers that were looking in Miami started to migrate into Broward County because the disparity in price was so large that they could not ignore the value proposition of Broward County. Even though there's a natural affinity, you say, well, I want to be closer to all the things, the urbanization in Miami. Broward County has started to really attract a lot of the international buyers, so much so that the developers in Miami-Dade County did one of two things. They either came to Broward County and started developing, or they decided that they were going to change their development strategy in Miami. But most of them said, let's just go up to Broward. Let's meet the market. Let's find that market. So the waterfront condos, I think, still represent a good value as it relates to historical run rates. We're at a very stable place in the waterfront condo market. On the non-waterfront condo market, the numbers are still really low as a percentage price per square foot. Transactions, number of sold, up. And inventory up a little. A lot of this, there's a lot of noise in this non-waterfront condo market. We've tried to extract it, but one of the things that's really dragged in particular, Broward County non-waterfront condo market down is the number of conversions, the number of condo conversions that were entered into and experienced in the last cycle. And so what you have is you have a lot of this older apartment product that was converted to condos that really maybe should or shouldn't have been. It was fractured. And now those fractures are being bought up by investors that are going in and buying the majority of the fracture. If you had a 200-unit apartment and the developer sold out 100 units or 120 units, the investors now are going back in and they're buying the biggest portion of the fracture. They're buying 60 or 80 units at a time, and then they're buying up the rest of those condo units and recollapsing and going back to apartments. So that cycle has been going on now for about 3 or 4 years. It will continue. There are still a number of fractured projects. The Tao is out to market this month, actually. There are a number of fractures that are still out there that are kind of hanging and weighing the market down. But I think what we're going to see in the condo, at least in that fractured market, is we're going to see a lot of those condos go back to multifamily rental housing, which they should, quite frankly. But the overall non-waterfront market is still fairly soft, but healthy. Miami-Dade waterfront condos, completely different. Again, look at, non-waterfront condos in Broward County, $200 a square foot average. Waterfront condos in Miami-Dade County, $479 a square foot on average. So, substantial spread when you go to buy a 1,000-foot condo. You're talking about, a $250,000 price difference, and that's really substantial. If you look at the number sold in Miami-Dade County, we went from 6,700 sales in our sample down to about 6,100 total sales. Again, these are just the product that's in our sample, so this doesn't include all of the condo product, but it's representative of what we think the primary market is. And so we saw a real big decline in the number of waterfront condo sales in Miami-Dade County last year. And it's one of the things that everybody's really looking at and making news about. They say, well, sales are down 10 or 15%. Where are the buyers going to come from? There are less international buyers, which relates to the pre-construction market mostly, but the amount of activity in the waterfront condo market is absolutely down in Miami-Dade County. There's no two ways about it. But with price points of $480 a square foot, I can't see why we would expect it not to be. And again, when you go back to the Broward waterfront condo market, order of magnitude in our pool, 6,400 transactions versus Miami-Dade at 6,100. I believe that Broward County is poised to continue to attract that segment of the market. I think you've got really, the positive fundamentals are in place that Broward County continues to attract that. In fact, I think if you really look hard at the numbers, you did attract it in many ways in 2015. So overall, big market takeaways. This is not just the luxury market. These are the overall markets that we cover. Sold to available inventory is down 2013 to 15. We are starting to see, especially in the single family category, a lot of people are pricing their home. They don't want to undersell, right? So they price their home at a level that they expect to execute on. But what that's doing is that $930,000 home, people are asking $1.1 million for. And so now it's in the million to $5 million category. And so inventory in that category is going up because people are reaching for that price. But they're waiting as well, and they're finding that price is coming down. So I think that I'm going to call it irrational asking prices. People still believe that the residential market is fierce, hot, ready to roll, which is great. But those sellers are saying, well, I want to get my price. And so setting that price rationally in 2016 is going to be important. All segments have more inventory, and there are fewer sales as a percentage of inventory. Some of this is pricing, but really what's going to come down to in 2016 is depth. We're going to go back to the fundamentals of where's the job growth. We've absorbed a lot of the pent-up demand. In Miami-Dade County, certainly, we've absorbed a lot of the international demand. So the question is, where does this demand, what is the source of demand? And 2016 is really going to be about fundamental demand. It's going to be about employment growth. It's going to be about job security. It's going to be about wage growth. It's going to, we're going to get some tail end of promotions and people coming into new jobs in the middle market. But again, I think in Broward County, the good news is there is going to continue to be, through 2016, a domestic second home market that's going to be more attracted to Broward County than it is attracted to Miami-Dade County. So when we look at the end of 2016, I think Broward's going to be in a much better position to look at that inventory and have captured the second home market. So we've burnt off this pent-up demand, and I also think that we've probably burned off double-digit price increases unless the economy just turns around and does something that I don't see. I think that when I look at the economics of the United States, there are certainly some very positive things happening, but you have to look at the global, the world economy, and you have to wonder, okay, well, there has to be some effect on import-export trade. Well, that directly affects Miami and Broward, right? We have two of the country's largest ports. You say, well, there has to be some impact on construction when the numbers are sort of going sideways. Well, if construction slows, that's part of our fundamental demand. That's part of our fundamental employment drivers. So if that's going to slow a little bit, then that's going to affect employment. So I think what we're going to do is we're going to reach 2016 to kind of hit an equilibrium. And it's going to be one that Broward will feel better about, but it will be an equilibrium. Pricing, 2015 in Miami-Dade, pricing was down, and in Broward, probably about equal, but the selling market most of the selling market doesn't know it yet. And so it's going to be up to us to not panic the world that this is going to be a complete slowdown and the world's going to come to a grinding halt in South Florida again. That's not going to happen. What we experienced, and for those of you that are, well, how do I say this? For those of you that never watched a television show in the 1980s because you're too young, this last economic slowdown that you experienced as you were coming out of college, was unprecedented. I've been through 4 real estate cycles at this point in my career. I can tell you that none of them are comfortable. They are all disruptive, and you wish they all didn't happen. But at the same time, what we went through in 2007, 2008, 2009 was seriously unprecedented. Not even in my lifetime have we ever experienced anything like that. So I think if you're talking and you're out in the market, you're going to hear a lot of people say, well, U.S. economy has to slow down. There's just no way we can keep going. And I don't have any really good talking points to change your mind about that. I do think that this presidential election has not exactly engendered the confidence in the American psyche that I had hoped. But nonetheless, aside from this crazy election and what it means on the backside, presidential elections always create a level of uncertainty. They always create concerns. That affects the stock market, it affects the bond market, it affects all of our financial instruments, it affects the business psychology of the U.S. So what we're going through right now in the presidential election cycle is really just fear of the unknown. And we could come out of that, and the U.S. economy can remain strong. We're not growing too fast. We're not really growing too slow. We are growing at a measured pace of about 2 to 2.5% GDP, which means we're not flooding the market with too much money, and we're not pulling so much money back that the economy is shrinking. So this is kind of the way in which you would think you run an economy, right? Not driving over and speeding at 90 miles an hour, and not in reverse. But just understand that this year is going to be fuzzy, and it is going to be unclear, and you're going to hear people say, well, I think the economy is going to do terrible next year. I think we're going to have a recession by June of 2017. Or I think we're going to have some kind of big economic shock by, and people make these predictions. Well, two things. First of all, if that were to happen, you wouldn't know about it till 2019. It would be too late, right? Because the government has to see 2 quarters of back-to-back negative GDP growth before they even call it a recession. The 2016 GDP is not out. The 2015 GDP, final GDP figures are still being revised. So I really, if someone says, well, we're going to have a recession in 2017, by the time we learn about it, you'll have forgotten about it already. Here's what I will say. The housing market in Broward County is at or around replacement cost. So what you're not doing in Broward County is you're not buying a house at 120, 130, 140% of replacement cost, which means you're in good fundamental territory, right? And I think that's a positive. I think that's a positive message. I think, just like I would caution anybody, if you go to buy a home today and you think you might have to sell it next year, don't buy it. Because your brokerage commission is going to eat up, even if the market's doing really well and going up 6 or 8% a year, next year you're going to be back to the same place you were when you bought it, because your exit costs are going to cost you in a year. So, you talk to people about what their expectations are. You talk to them about how long are they planning on staying, where they want to be, what are their objectives. And I think when you get through that conversation, then you have the real talking point about, well, I'm not sure that things, pricing may go down. You know what? Pricing may go down. But if interest rates go up, every bit of pricing going down is going to get chewed up by interest rates going up. You don't know what's going to happen in the economy. What I can tell you is even if it slows down, if you're planning on being in your house for 5, 6, 7 years, it's not going to matter. So yes, some things are slowing in Miami. Yes, good news in Broward. But ultimately, the positive message is this. We're not out over our feet in the economy. There are still some very, very good things happening in the U.S. economy. And let's just hope that, neither of these presidential candidates or either of them, once elected, don't mess it up on us. Let's talk about market psychology. Sellers in the market think it's a good time to sell, and they think it's a good time to sell because sellers have a herd mentality, right? They tend to move where their friends move, and they talk to the people that they associate with, whether it's their work colleagues or their personal friendships and relationships, and people talk. They say, wow, market's on fire. I put my house on the market, and 8 days later, I had a full price offer. I probably listed my house too low. Don't you love that, right? You price it right, and you execute, and you get a full price offer, and then they say, well, I want more, Of course, it was great when you used to have bidding wars. You didn't really even have to price the house right. You just let everybody keep throwing the price higher and higher. But the sellers in the market still believe it's a good time to sell, but they're still at that point of unreasonable asking prices. So some of the good things about the bad news in the media is that sellers are actually starting to think about, well, maybe I need to get serious about my price. Again, I can't tell you how to do your job. These statistics are always helpful in understanding the directionality of the market, but my experience is that the local and neighborhood conditions are far more important than these broader market conditions. What really matters is what's happening in the neighborhood, what's happening with your schools, what's happening with, the jobs in the area and all of those selling points. But days on market is up. And I would say this, the sellers have to recognize that if there's more inventory, broader market metrics, and pricing is not going up 5%, 6%, 8% year over year, that if they want to execute within some reasonable time on market, they have to set their price right. There is still a lot of product out there that people are looking at and saying, I'm not even gonna go look at that. That's an insane price. It doesn't make any sense at all. Certainly buyers have concerns, right? Media reports in the market about Miami and the housing market generally. Business conditions is a real concern. I mean, we're in the business of real estate, right? So we tend to focus on what's happening in the real estate market. But one of the things I would strongly encourage you to do is to talk to business people about what's happening in their business. Talk to your friends that are lawyers and talk to your friends that are, practicing in other areas, whether it be title or insurance or otherwise. And what you'll find is that the business conditions in the US generally, and in South Florida particularly, are very mixed. I don't think people are out on a hiring binge in most segments of the industry. Most people are working harder than they've ever worked. Everybody's sort of doubling down on productivity. But when businesses are not at overcapacity, when they're not actively hiring, that has to have an impact on the real estate market. And so buyers are looking at that today and saying, that's a big concern, because a lot of the luxury buyers in particular, they're the folks that own these businesses. They're on the front lines of when the hiring is going to occur and what their staffing needs are. And looking forward in the business, the general business sentiment is down, from last year. I mean, if you look at any business survey that says, how do you feel about the economy? How do you feel about your prospects? How do you feel? There are some real concerns in the business community. The stock market was a terrible deflator for the fourth quarter of 2015. The stock market last year performed horribly. So if you're selling into a luxury segment, a lot of the discretionary income that the luxury segment buyers derive is not based on them going to work every day, right? I mean, people that buy $5 million homes don't necessarily drive to work to make the money they need to live. Where they really get hurt is when they get hit in the pocketbook of their stock market portfolio and they wake up after the whole of 2015 and every dollar that they put into the stock market is worth 2% less. If you were in a moderate growth, 40% stock or 60% stock, 40% bond, sort of typical straight down the middle, UBS portfolio last year, you lost 2% or you gained 2% and you were in the equities market. That's scary, right? So I think that you understand that the stock market has an impact on your psychology, no more so. I mean, the most impact it has is in that luxury market segment. As I mentioned before, fear of global economic conditions is present, it's real, and all I could say is this. I had breakfast 2 weeks ago with an investment banker from London who was in Miami looking at some investments. And I said to him, the people in the US are very, very concerned about the US economy not being able to hold up. And his primary job is to raise private equity money to invest in Eastern Europe. And I said, well, what are the business conditions in Europe? I mean, understanding that the UK is considering leaving the euro, and the euro is a disaster, and the eurozone economies are on all different fronts, sort of not cooperating. I said to him, I am concerned that US money is going to leave the US. The big institutional money will leave the United States and go to Europe to buy assets that are discounted because the economy is down, so assets are cheap in Europe, and the dollar is strong. So if I take $1 from my investment bank in New York and I go convert it to euros, I get $1.40, and then I buy an asset that's 25% worth less in euros than what it should be, I'm in good shape, right? So I said, why aren't people moving institutional money out of the US and bringing it to Europe? And he said, you have to go to Europe. You have to see the fear on people's faces around the world about what's happening. He said, you're sitting in the United States and you're afraid of what's happening in the economy in the United States. He said, I'm telling you from the outside and being on the outside of the United States, Everybody is coming to the United States. They are not leaving. They are not putting their money in emerging markets when the oil is where it's at and commodities are where it's at. There is no other safe haven than the United States. And he said, that is not going to change in 2016. So he said, you may be worried. He said, the rest of the world is panicked. So do not worry. He said, you're fine. He said, everybody looks at 2.5% GDP growth in the US. They're excited about it. It's a savior. So, I had been talking with people really over the past year, and we had started to see some money move in the third quarter, big institutional money move in the third quarter overseas. And I thought that was going to start the trend. But when you look at the international inflows of money to the US, we're still net positive. And most people think that because of there's so much uncertainty that will continue through 2016. That doesn't necessarily mean that the Chinese are going to come and buy our condominium project. I get interviewed a lot about Chinese buyers and, why won't the Chinese come to Miami and just buy up all the product because they're such avid investors and so forth. When the residential buying pool, we get a lot of international buyers in Miami, and that residential buying pool, a lot of people say, well, they're buying for an investment. They're buying just to park their money. Somebody called it one day a safety deposit box in the sky. There's some of that. There certainly is some of that. But the condominium investment and the international condominium investment in Miami is sort of at a magic sweet spot in that $500,000 to $1.5 million range. And that sweet spot is the reason that there's demand, because it's very difficult to go out and identify a commercial income producing property opportunity for $500,000 or $800,000. You're buying an old 3-unit apartment building, or you're buying you can't even buy a shopping center for $500,000. A small little strip center that might have a convenience store or something, that's a $2 million asset, right? So if you're in the sort of emerging wealth of the South American economies and you want to place $500,000 in cash or $1 million in cash, the condominium market kind of fits that profile. The money that I'm talking about coming at this point is institutional money in hundreds of millions of dollars. So this is not necessarily money that's going to buy up the condos. This is more money that's going to continue to feed into the economy to foster our continued success. But that being said, there are a lot of people that will make choices to move to South Florida from other countries and also from within the United States. And that's where I think Broward is really in a good position over the next 2 years. A lot of people delayed retirement in 2006, 2007, 2008. And when we had that big crash in 2008, the people that were in their mid-60s delayed retirement. They said, well, I can't retire. I don't have enough money now. My house, the equity in my house is nearly gone. My stock market portfolio is a disaster. And so what am I supposed to do? I have to stay at work. And that's fine. And they worked, and they worked, and they worked, and they worked. And it's like, holy cow, when is this recession going to be over? And so now they've been working for like 6 or 7 years. And in most of the US markets, the housing market is back. And most of the stock portfolio is back. And so now what are they doing? They're making decisions. Now it's time to retire. They're 5 or 6 more years out. Now instead of their kids having started college, now their kids are finished with college. Most of their kids are out having kids. And so now they're ready to make that move. And any sort of temporary blip that's not a crash, that doesn't crush their portfolio, they get out of their house and their portfolio wavers a little bit, that is not going to affect a 65-year-old person in 2008 who delayed their retirement decision 5, 6, 7 years. They're not going to wait. They're just not. And we're going to benefit, and that's going to be part of the demand cohort that's coming on. But I think the biggest impact short term is going to be in this $1 million to $5 million product, and the $500,000 to $1 million condo range. The high-end condos, both in Miami and Broward County, are still holding up rather well because there's just not many of them. So let me give you a couple of things about the downtown Miami condo market that you may or may not know. My firm publishes the quarterly market report for the Miami Downtown Development Authority. We've been under contract with them for about 3 years. And when they came to me, they were still studying why the market crashed and what happened the last time and how do we avoid making the same mistakes. And I said, look, you can't avoid making the mistake of an economic crisis. You just can't avoid that. They said, well, if there's overbuilding in the market, we don't want to see there be overbuilding. We want to have a conversation so that the development community is thinking about it and the investment community is thinking about it. I said, that's fine. But an economy doesn't have a big reverse correction in price just because you build too much. You know, certainly we all studied in college or in high school laws of supply and demand, right? The more you build, the price should come down. And that's true to a certain extent, but in real estate what tends to happen is as you build new product, that pricing holds up. What gets creamed is all the Class C product that is no longer needed, and the Class B product takes a little bit of hit on occupancy. But the Class A product really gets priced at replacement cost, and some measure of that. Similarly, in the residential market, you know, you can build houses and build houses and build houses or build a lot of condos, and depending on the timing of that, you may not have enough buyers at that particular point. But that's not what craters prices. What craters prices is when there's a debt or an equity shock in the market. When all of a sudden the banks just stop lending, or people just pull in their horns and they don't have any equity in their portfolios to access equity and buy. And so all of a sudden the credit markets freeze up and the equity markets freeze up, and that's what creates these big swings in pricing. So I said we can track all of these things, and it's important, but it's not as important as understanding the broader economic drivers. So we've been doing this now, and I want to give you a couple of key statistics so that when people say, oh, that Miami condo market's really bad, huh? You can just remember three things that it's not as bad as everybody thinks that it is. Number one is there's about 7,300 units under construction in downtown Miami. And when I say, for those of you that know the geography, you know, when I say downtown Miami, I'm really talking about Brickell all the way up to 195, immediately south of the design district. So within, and east of 95. So within that downtown urban core, there's about 7,300 units under construction. There's about 1,900 units that have been completed since 2012. But what you do see here is the pre-contract and reservation phase, which are the two columns to the right. You'll see that reservations phase is way down. At the end of 2014, we had about 1,600 units that were actively taking reservations. We're down to about one project that's taking reservations. Those that are in contract, where they're signing contracts, we were at about 2,000 units in 2014. We're about 1,900 units in 2015. And I would suggest to you that of those 1,900 units, not all of them are going to get under contract quick enough to come out of the ground. And if you're working on contracts on pre-construction product in Miami right now, it's a toss-up, really, as to whether you start building. And a lot of the people that have land for sale or otherwise, they're saying, hey, you know, we're waiting till the next cycle. So that's an important understanding that the market is very obviously recognized that you're not going to throw a 500-unit project out of the ground and start tomorrow. 7,300 units under construction. Of that, about 3,000 units will deliver in 2016. But of those units delivering in 2016, 85% of those are pre-contracted with 50% deposits. That means 85% of that inventory was already sold in 13 and 14, and it was just waiting to be delivered. So, and of the total 7,300 that's under construction, that is about 75% pre-sold. And that's going to deliver to the market in 16, 17, 18, 19. There's about 3 or 4 years worth of construction time and delivery in that pipeline. To give you just a relative sense of magnitude, in 2007, 2008, we delivered almost 15,000, we delivered almost 15,000. It was 14,611 units into the downtown Miami market. So when people say to me, Graziano, how in the world could you say that the market is not oversupplied? The cranes are everywhere. It's got to come to an end. The builders are overbuilding. Stop. We're not even at 50% of the production that we were in 6, 7, and 8. A lot of the cranes that you see are not all residential cranes. There are new hotels being developed in downtown Miami. There's other things that are happening in the market. But most importantly, we're at about 50% of where we were in 6, 7, and 8. And we're at a completely different environment in terms of the deposit levels that are down. The developers are not allowing buyers to sell their contracts. You have to close on your unit. You cannot flip your contract like you could in the last cycle. And so one of the shell games that occurred in the last cycle was people put 10% down, then they flipped their contract for a profit, then somebody flipped it again for a profit. And so this one unit, before it ever had to close, got propped up 3, 4, 5 times in a sale. That is not happening in this go-around. You'll start to see some statistics where people say, well, Millicento, which is a related project in downtown, Millicento delivered, and 50% of the product is out to the market again. Isn't that a problem? Well, here's what I tell people. If I bought something for $250 or $300 a square foot when George Perez was just starting the project, and now it's worth $500 or $525 a square foot, I don't think that's a problem at all. And even if you say, well, condo pricing is retreating, you might only get $450. I bought it for $300. I had a conversation with a guy from Bloomberg 2 days ago. He called me up and he started throwing all these statistics. He says, oh, well, people are selling these units and they're dumping them on the market, and there's going to be all this recycling of the units that have already closed. I said, don't worry. He said, no, what are you talking about? He says, everybody's going to take a hit. I said, they're taking a profit. They're making a profit on those units today. So he didn't buy it. That's okay. But I can tell you that a lot of the resales are people, again, putting those condo units back out on the market at prices that's higher than what they paid. And in many cases, they're saying, if I get it, great. If I don't, no problem. We are going to start to see some sales where people closed and now they need to monetize. They need to get back out. Their currency is devalued by 30, 40, 50%, and they're going to want to get out. And I think there are going to be some good opportunities, but it's not distress. It's not systemic distress. So again, one thing to remember, 16,000 units last cycle. We've got 7,300 under construction. Second thing to remember, 75% of the inventory that's going to deliver downtown in the next 3 years is already under contract. And of what's being delivered this year, it's 85%. But I'm counting that as the same thing in case anybody's keeping track. And then last thing is this. We did an analysis of the amount of equity in the market and how that equity differentiates today the Miami market. And what we found is that on average, about 85% of the transactions downtown Miami in 13 were all cash. 85% of the condo transactions were all cash. Today, that number is about 64% on average being all cash. The new product that closed in 2015, 78% of it was all cash. So the developers are pre-contracted at prices that they're making money, and they're closing the projects, and they're substantially sold out. The buyers are buying all cash. The banks are not, God bless you, the banks are not lending or over-lending, if you will, on either the resale of condos or on the construction of condos. So the banks are not really exposed. And so the only question is really who gets hurt. If the banks don't get hurt, the buyers don't get hurt, the developers don't get hurt, somebody's got to get hurt. There's got to be an ox to gore. And the answer is the people that bought land downtown last year that paid top dollar thinking they were going to get a project out of the ground, they may get hurt. Or they may hold, maybe their equity. But we don't see major systemic risks in downtown Miami. I don't see that as a huge issue. I do think we're going to see the numbers move a little this year. I think the rental market is going to be completely tenant favorable next year. I think once the condo product delivers, we've got another few thousand units under construction of apartments. And we've seen it in Broward County too. I mean, you've built a lot of apartments in Fort Lauderdale over the last 2 years. And those apartment rents were fairly strong, but I think as this year's product delivers, you're going to start to see Class A apartment rents stabilize as well. And so, overall, there's no bust looming. We're in relatively healthy shape. We are going to see it level off this year, which is fine. And I'm happy to report that I'm very bullish on Broward County. So thank you for having me today, and I really appreciate your time.